Dear students, we welcome you to our session conducted by our YouTube channel, SL Account School. Today's topic is partnership accounts. A partnership is a form of business where two or more people share ownership and the responsibility for managing the company and income or losses the business generates. Foundation or the fundamental basis for the existence of partnership is mutual agreement among partners. A partnership agreement may be implied, oral, or in writing. Partners co-own the properties, but co-ownership alone is not partnership. For an example, if a property is inherited by the parents to children, they may co-own, but they are not partners. Similarly, sharing of profits alone is not an indication of partnership. For an example, a portion of profit can be shared among managers or staff members. Except for few special features, partnership account is as similar as sole proprietorship. For each partner, there will be a separate capital account, which may be split into two portions. One is capital account and the other one is current account. Capital account is usually fixed, while the current account is the current total of appropriations and the share of residual profit and loss, less drawings, etc. To have the capital account untouched. In a partnership, since there is more than one owner, whatever the benefit of that business will have to be divided among partners. Therefore, an apportionment account is necessary, which is a compartment below profit and loss account where these transactions are dealt with. Students must specially note apportionment account is used for distribution to partners on their capacity as partners. Any other payment in different capacities. For an example, if a partner has let his personal property on rent, the rent paid to him will not come into apportionment account because he has done as in the capacity of a landlord. Therefore, the rent will be charged to profit and loss account. In a partnership, usually we hear things like interest on capital or drawing, salary paid, etc. But in effect, all these are profits. These terminologies are made in order to give a little higher apportionment to a particular partner who may contribute better than others, basically done as equitable arrangement. Therefore, these all will be dealt in apportionment account. Therefore, when they say sharing of profit, it refers to only the sharing of remaining or residual profit. Further, interest on regular drawings are made for average period. If minimum profit is guaranteed to any partner, difference will not be charged from all partners, but the one who has given the guarantee. Dear students, it must be fully understood every time when there is a change in partnership, existing partners either will gain or lose. Therefore, it is necessary all the unrecorded assets have to be recorded at this point to be fair by all parties. Okay. Changes in partnership can occur due to admission of a new partner, death or withdrawal of a partner, amalgamation of partnerships. That is to say, for the greater benefit of the business, two different partnerships are brought up together and all are made partners as agreed upon. Dissolution of present partnership or converting them into some other form, say limited liability company, change of profit or loss sharing ratio, the partners may remain as same. Few examples of unrecorded assets are goodwill to substantial changes in the valuation of existing assets, life insurance policies of partners. Here we are talking of joint life policies. In case of a death of a partner, the partnership may not have enough liquidity to settle. Selling some assets of the business can negatively harm the business. In order to avoid this, the life insurance policy amounts will be used in order to settle the representative of the deceased partner. The next one, work in progress of professional practices. For an example, in a legal firm, cases must have progressed at different levels as it is recorded. When received, all the new partners too will have a share on the loss of old partners. Few other new features you will come across is 1. A splitting revenue account. Example, if a change take place on the 7th month, profit and loss will be made for the first 7 months and the balance 5 months as two different revenue accounts. Topic is streamlining of capital. If the present amount held by each partner as capital, if it is not desired, a new amount may be agreed upon for where there may be a new introduction of capital or taking away a part of it may become necessary. Similarly, if it is in the case of profit or loss, a reapportionment of them will take place. Dear students, these were given to you just to give an insight of the topic and hope you all have understood. Now let's move on to some questions. The question is about the drawings made by partners where it would appear. 4 options are given. Drawings are neither income nor profit, therefore apportionment account or income statement cannot be used. The remaining 2, capital account is said to be fixed, therefore that cannot be used, therefore the drawings will be debited to current account. D is the answer. The next question, in a partnership, the income statement and apportionment account details are shown. Remaining profit after certain apportionments are given, we are required to calculate profit before any appropriation. To the residual profit of 12,000, interest which was added earlier will have to be added now. Similarly, salary account of 5,000, interest on drawing which was deducted will have to be added now. As you all would note, depreciation of non-current assets 5,000 is not taken because it is a profit and loss entry. The interest on loan from a partner Y is also done in a different capacity as a money lender. Therefore, that has gone to profit and loss as well. Therefore, the amount is 18,500. Answer A. Okay, the next MCQ. X, Y, and Z are in partnership. They have the following assets and liabilities. A list is given here. How these assets were disposed of is given below, and we put them into a dissolution account. And half of the fittings were taken by a partner for 560. Balance fittings and the entirety of inventory is taken, sold for 140. From the receivable, they could recover only 40,300. There is a dissolution cost of 2,500, leaving a loss on dissolution 82,200. Next question, Smith and Jones are in partnership and their profit sharing ratio is given. Profit before apportionment is given. Apportionment details are also given. Interest on drawing is added. Salaries to a partner is deducted. Therefore, the residual profit is 113,650. 3/5 of that belongs to Smith, which is 68,109. The answer is B. The next question, closing and opening working capital of a partnership is given. The difference can be profit. Closing working capital of 34,000 after a drawing of 22,000 will have to be added. Therefore, it should have been 54,000 minus the opening working capital. The balance is 36,000, presumably the profit. The answer is D. Now the next question. A and B are business partners sharing profit and losses equally. Interest paid on capital at the rate of 5%. Brian is entitled to a salary of 12,000 per annum. After calculating the net profit for the year ended 31st July 2003, the following balances remain in the ledger. Net profit of 30,000, drawings are given. Opening, capital and current account balances are given. The appropriation account, net profit 30,000, interest 5% calculated on capital is 7,000 deducted, salary of 12,000 deducted, the remaining profit is equally divided, which is 5,500 each. Look at the columnar form of current account of partners, to which, in addition to the details discussed, drawings of 14,000 and 15,000 respectively have been deducted, arriving at new balances. Now the adjustment regarding goodwill. Goodwill account debit, crediting the existing partner, that is Asif and Brian, 25,000 each equally. Since goodwill is not supposed to appear, it is written off again among the current partners at the rate of 2:2:1. Please note the capital introduced by C, 20, after the adjustments of goodwill, remaining only as 10. Okay, the final question. A and B sharing profit at the ratio of 3:2. Profit is given, apportionment details are given, drawings are given, balances of capital and current account details of partners are given. Look at the apportionment account, profits given, salaries are deducted, interest on capital is deducted. See the working 1. Interest on drawings are added. See working 2. The residual profit is arrived at. Apportionment among A and B as per their ratio is shown here. See working 3. In conclusion, dear students, we expect you to do more and more exercises like this in order to get a better understanding of the subject, and we hope you have clearly understood the subject as it is now. Dear students, as you all know, these classes are provided to you by our YouTube channel, SL Accounts School. We kindly request you to subscribe, share, like, promote it among your friends and those who are interested. Thank you very much.